Peer-to-peer lending, P2P, is an innovative form of borrowing and investing money without the involvement of traditional financial institutions. By using online platforms, borrowers and lenders can make mutually beneficial transactions directly without the need for a bank as a middleman. With more than 300+ peer-to-peer lending websites operating worldwide, the market has experienced tremendous growth in recent years. The most popular sites in the world are early adopters such as Lending Club, Prosper, and Funding Circle. How does P2P lending work? In P2P lending, an investor has some extra money that they are willing to lend. In return, the investor will earn interest on the loan payments. To get started, they'll sign up for a P2P lending platform like Prosper or Lending Club. These marketplaces match investors with borrowers who are looking to take out a loan. Once the borrower applies for a loan, they'll fill out some basic information just like they would for a traditional loan. Most of the financial products offered are personal loans, though the lender can set their own criteria. For instance, some lenders will provide loans specifically geared toward debt consolidation. After the borrower has filled out the application, the lender will check their credit score and decide whether to approve them for the loan. Once the borrower is approved, the lender will fund the loan. Benefits of P2P lending for businesses. For businesses, P2P lending allows them to seek out the financing they need without applying through a bank. Let's look at some of the biggest pros and cons of P2P lending. Pros. Streamlined application process. The most significant advantage of P2P lending is the easy application process. Businesses will have to deal with far less paperwork, and you'll know whether your application is approved or denied almost immediately. Low rates. P2P lending comes with surprisingly low rates because individual investors don't have to pay the same overhead as banks. Of course, you should always do your homework to ensure you're getting the best deal possible. Options for imperfect credit. Anytime you're applying for a loan, the higher your credit score is, the better. But with P2P lending, imperfect credit won't necessarily disqualify you from loan approval. Fast funding. Once you're approved for a P2P loan, you should receive the funds within a week. However, some marketplaces promise financing in as little as 3 days. Cons. Fees. Although you may receive a low interest rate, P2P loans often have additional fees. For instance, some lenders will charge an origination fee between 1% and 8% of the total loan amount. Make sure you read the fine print before agreeing to the loan. High rates. One of the advantages of P2P lending sites is that excellent credit isn't necessary to qualify. But if you have poor credit, you may get stuck with high rates and unfavorable repayment terms. P2P sites for businesses. P2P marketplaces have grown tremendously in recent years, so it can be hard to know where to look first. If you're interested in taking out a P2P loan, here are the 4 best options for small businesses. Number 1. Funding Circle. Funding Circle offers small business loans between $25,000 and $500,000 with terms ranging from 3 months to 10 years. You'll receive a loan decision within 24 hours, and once you're approved, you'll receive the funds within 3 days. You will need excellent credit to qualify for a loan through Funding Circle. But initially, the company will do a soft pull on your credit, so there is really no downside to applying. Number 2. StreetShares. StreetShares offers P2P loans specifically designed for small businesses that have strong cash flow. The loans range from $2,000 to $100,000 with term lengths from 3 months to 3 years. Once your application is approved, you'll receive the funds almost immediately. And there are no prepayment penalties, but you will have to make weekly payments. Number 3. Lending Club. Lending Club offers business loans from $5,000 to $500,000 with repayment terms between 1 and 5 years. The company connects businesses to a network of lenders through its partnership with Axion Opportunity Fund. When you're ready to apply, you'll be assigned to a dedicated client advisor who will walk you through the application process. Lending Club is a good option for businesses that have a hard time getting approved for a loan from a traditional lender. Number 4. Upstart. Upstart offers loans between $1,000 and $50,000 to individuals looking to start or expand a business. You'll make monthly loan repayments over a repayment term of 3 to 5 years. Upstart doesn't charge a prepayment penalty, but it does charge a one-time origination fee. Upstart is an excellent option for borrowers looking to get a new business idea off the ground. The company prides itself on looking at a borrower's potential and has tons of positive reviews. Other types of loans available with P2P lending. Personal loans are not the only option in P2P lending. Here are some of the other loan options available to businesses and consumers. Small business loans, debt consolidation, mortgages, student loans, auto loans, auto refinancing, medical expenses. Other considerations. People who are looking to invest in peer-to-peer lending should be aware that borrowers do default on their loans, and the degree of supervision and oversight of P2P lending sites differs from country to country. P2P lending scams are an unfortunate reality in the modern age of digital banking and investments. Whenever you loan money to someone, there's always a risk of getting scammed or swindled, and peer-to-peer lending is no exception. Research suggests that because of the lack of industry-wide transparency regarding past and existing loan performance, some platforms are incentivized to use models that exaggerate their internal rate of return. As a result, some P2P lending sites might display returns higher than those actually seen when accounting for defaults. What happens if you don't pay back a peer-to-peer loan? If the borrower does not pay back the loan, the lender has the legal right to take action. This is why peer-to-peer websites usually require collateral, such as property or other assets, in case of default. The peer-to-peer lending website usually acts as a debt collection agency but also sometimes hires external collectors to recover any losses for the investors. It is important to note that peer-to-peer lending platforms often have their own terms and conditions for defaults and late payments. Borrowers and investors should be sure to thoroughly read these before entering into any loan agreements, as they may differ from platform to platform. How do you qualify for a peer-to-peer loan? To be eligible for a peer-to-peer loan, you must typically meet the platform's criteria. Most platforms seek potential borrowers with a minimum credit score or income level and often require them to provide some form of collateral as security. Each platform has different standards and guidelines, so it is essential to thoroughly read the terms of each before submitting a loan application. For those who don't meet minimum requirements, some platforms provide cosigner loans, a solution that involves another person taking legal responsibility for loan repayment if you are unable to do so. That's all for this video. I hope you enjoyed it. Let us know your thoughts in the comments section below. If you haven't already, then don't forget to subscribe and press that like button. Also, hit the bell icon so you can never miss new updates from us. Thank you for watching, and we will meet you in the next one.